Japanese indices were leading the gains yesterday. They're leading the gains today as well.
Big relief for IIFL with RBI lifting the restrictions on its gold loan business.
The Nifty must, on the downside, hold 25,120.
They did a good job, I think. It was a hawkish 50 basis point cut.
The Nifty is starting with 0.5% gain, 25,540.
Our biggest overweights would be things like pharma, auto components.
Long serpentine queues can be seen outside the store. Even now,
the Fed and what it says and what it does still has an inordinately large impact.
It definitely is a Friday for the bulls. New record highs yet again.
Particular stock that's doing very, very well in the session today is ITD cementation.
The Nifty surged above the 25,800 mark. Now it has come up from those levels, but there's nothing that bulls can complain about.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that is the day so far, and what a day we've been having. The market up plus 200 points. It was actually almost up 400 points on the Nifty, and we've cooled off since. This is the last hour, and we'll track markets for you. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surabhi. Surabhi, hi.
Hi, Prashant. I guess the week started off on a bit of an iffy note, but by the time we're ending it, the bulls would be feeling quite convinced because it's been one big move, one big rally playing out.
All right, it's been one big, and sometimes these big global events, it's not that day where the real reaction is seen as day two.
Yeah.
And we've seen that many times in the past as well, and this seems to be one of those as well. So one day late, but I have to say it's a satisfying reaction. I mean, imagine if you were down today as well. I mean, the Fed cuts 50 and the markets are all sulking and down, right? Down and out. I think that would have been a bit hard to fathom and to explain as well, which is not what we are having. We're up solidly 250 points, so 25,700, which means that now, with that upper end of that ending diagonal on the Nifty that we were talking about, I mean, if we close here, that is gone. I mean, so are we starting a fresh impulse move higher? That becomes the new question, really. So we'll see what the close really is like, because we've been, sort of flitting or giving up and adding 100, 120, 130 points just like that. If you just see the last 1 hour or so, the sensex is up 800. Mid-cap index, actually large caps are outperforming what the mid-cap and the small-cap part of the market is doing, because those are doing well, but they're up about 0.8%. But really, it's a vibrant screen. Advanced decline is about 2:1. Consumer stocks are doing well. Metals are doing well. Autos, I mean, especially the tractor names, and we'll talk about each of these names with our researchers in a bit, and beaten down PSUs, especially on the defense side. They're making a comeback. Some of them are up between 7 and 10%. Surabhi.
Absolutely. I mean, it's a big list of winners out there. And, if I talk about some of the major movers and shakers, PSU names, which were completely out of favor in the first part of the earlier part of this week, they've come back in quite some style. Look at Mazgaon Dog, for instance, right now. It's a PSU index up 1%. Otherwise, it's one of the weakest performers of the week so far. But look at Hoodco. We spoke with the management in the morning, sounding extremely optimistic on the PMAY 2.0 scheme, under which they are going to be lending, very significant sum. There's Mazgaon, which is up 8.5%. There's Hoodco, there's Cochin Shipyard, 10% higher. So basically, the whole PSU space has come back with a vengeance. Rights, I could go on. I mean, quite a few names over here as well. And then there are other names. Some of the wealth management businesses, Nuvama, for instance, is up almost 6%. There is IIFL Finance, which of course has great news coming in the form of regulatory relief from the Reserve Bank of India. Stocks been up 8-9% throughout. So some of these names from the broking/wealth management side are doing well. But even newer names, so to speak, Devyani International, not often that we've spoken about a quick commerce player or a QSR, not quick commerce, but more of QSR. But you're having those names also on the upside as well. And then, of course, there's the likes of Reliance Infra. It's been quite the week for Reliance Infra. All kinds of positive news flow, settling old dues, looking at raising fresh equity capital. And the market's really lapped it up. By the way, Reliance Infra this week is up, hold your breath, 47%. That's the kind of move on the stock as the market is sniffing some sort of perhaps a turnaround and maybe a fresh lease of life. So lots and lots of action beneath the surface, but the surface itself is looking so good with the Nifty sitting on a 250-point gain. So the question is, what do you do now? In the last 1 hour, we have with us, as usual, Mitesh joining in with some thoughts. Mitesh, it's been a great day for the bulls. Would you take long positions even now on the index, Nifty, Bank Nifty in the last hour?
No. So, I think it's been a great day. I think I agree with that. But also the fact that it's been a very volatile day. Look at the last 2 hours of movement and on a 5-minute chart, and you will see that, it's been a vertical rally for the first 1.5 hours and then a big decline of about 300 points from the highs of 800 plus levels. And then again, a bounce back of 150, 200 points. So it's been slightly choppy. The Nifty futures premium discount also has been changing. So I'm not very sure what's happening in the short term. Though the overall the setup and the trend is on the upside, but on an immediate basis, I think it makes it difficult to figure out, and therefore taking a fresh position may not be the best idea. If you don't understand some part of the market, I think best to let it go and look for opportunities where you have some understanding and can take positions. And that is why we are trading with some stock-specific bias. I have a buy on iShares with a stop at about 49.50 and a target of around 5,100 plus. Both iShares and Scotch have done well, and Scotch, since the run-up has been there, I think iShares is something which is bringing out fresh, so I would choose an iShares. And also a buy on DLF. Now the stock has time and again failed to get past this 875-880 zone. So the way I would want to buy it is buy some now, buy more above 882. And for the time being, the stop loss is about 855 and a target of 920 is what I'm looking at.
Okay. All right. Got it, Mitesh. Thanks very much for that. By the way, while we're talking about a lot of the enthusiasm over here, also important to note that global markets, Western markets, they're cooling off a little bit because, they've been running on steroids at 50 basis points of a rate cut of a steroid that came through. But now Europe is tracking some red. There's about a 1% decline on many of the indices. And US futures right now also indicating that it could be a bit of a cautious start, digesting some of those recent gains. So, yeah, that's the picture across some of the major markets across Europe for the time being. But, another asset class that has celebrated the rate cut is, of course, the entire commodities universe. A lot of, base metal prices also moving higher. In fact, metal prices have been, metal stocks have been doing really well back home here. And along with all the rate cut enthusiasm, there's also a bullish note from Macquarie that seems to be supporting sentiment. Nimesh is here with the details from this one. Nimesh, fill us in.
That's right, Surbhi. So, while there is a Macquarie note and they've upgraded a few names, the metal stocks are also buzzing on the back of the strength in the global commodity prices, and that's helping the Indian metal names as well. So, I'll start with JSW Steel first because that's a big upgrade coming in from Macquarie. Today, they've upgraded the stock to an outperform, and then they've raised the target price on the stock to 1,077. However, JSPL, continues to be the top pick for Macquarie in the metal names. Even there, they've raised the target price to 1170 on JSPL now. On Hindalco, the target price has been raised to 760. On Tata Steel, they've raised marginally. They've raised the target price now to 171. And on Coal India, which is also buzzing in trade today, there Macquarie has raised the target price to 541. Now, a couple of key highlights from that report. One, the Macquarie commodities team believe that the upcoming rate cuts is not going to be disinflationary, and actually it's going to be market supportive in 25. And on the back of recovery in the demand as well, they expect prices to firm up in the second half of this year. So that's been the key reasons why they've today upgraded some of the metal stocks. Now, coming specifically to individual names on Hindalco, they've put out a note saying while the slowdown in the global auto demand will have a bit of a near-term impact on their subsidiary Novelis, but generally the prices are firming up both in aluminium and alumina, and that would mean positive for Hindalco. So that's a trigger for raising target price on Hindalco. On Coal India, again, Macquarie believes that while the easing international prices on coal, that can have an impact on the margins in the near term, but there is clear focus from the company in terms of improving the margins. There is a growth as well, and the stock has a 5% dividend yield as well. So on back of that, there is a target increase on Coal India as well. So Macquarie today has actually upgraded JSW Steel, but they remain bullish on the entire metal names.
Okay, got it. Nimesh, thank you very much for that. That point on auto concerns is well taken, actually. By the way, another development, European market action was that today Mercedes came out lowering its guidance and forecast for the year. Now, almost every single major global auto OEM brand has now lowered its forecast. BMW, Porsche, Volkswagen, and Mercedes as well being the latest one. So lots of concerns as far as global demand or European demand for cars goes. But let's take this to Sudeep Bandopadhyay is joining in, of course, from IndiTrade Capital. Sudeep, good afternoon. Thanks for joining in. Let's start with that question on metals, really. Right now, there's a lot of euphoria and positive sentiment thanks to the rate cut cheer. But would you be a buyer of any metal stock right now?
Well, I think, what we need to distinguish is between ferrous and non-ferrous. There is, while the rate cut is definitely gets the metals excited, and that's what pretty much is happening. There is another challenge which the metal universe will face, and they are facing, is that the biggest market, which is China, there is a problem. And that problem is genuine. It's not a temporary problem. It's not a, it's not going to go away. It's a structural issue there. And the government, for some reason, is not coming out with a major, liquidity injection or rate reduction. There were expectation on rate reduction. That also hasn't happened. So I think the China problem is going to remain for some time. So I would not like to buy, let's say the steel companies at this stage. If I have to really look at the metals, I'm structurally bullish on the entire aluminum industry. I think the use of aluminum structurally is increasing across the spectrum, whether it's the EVs, whether it's new gadgets. I think the use of aluminum is increasing vis-a-vis the use of steel and iron. And this definitely benefits aluminum companies in the long run. So if I have to buy, I will go and buy the aluminum companies, whether it's a Hindalco, Nalco, or even Vedanta. I think all these three stocks for long term is a good buy, even at current levels.
Got that. So that's the view on metal. Sudeep, hi, afternoon. Coming to you. Let's just talk about Reliance Infrastructure. Surabhi was talking about how the stock's up 50% in this month itself. So there is fund infusion happening, and there is talk that two prominent investors are going to be coming into the company. Vivek, tell us more. And also, I mean, just the fundamentals, right? What's the debt after this? What's the plan? And what's the shape of the company going to look like?
Well, that's right. Very importantly, before we start off with the fundraise, remember just yesterday, the company actually had a press release stating that, they had gone ahead and repaid most of the loans, the NCDs that they had, as far as their exposure to Edelweiss ARC was concerned. And the debt, on the listed entity, again, we have to mention that it's the listed entity, close to around 500 crores is the one that they were talking about. Now, what is it that the fundraise that you're talking about? When you're talking about the fundraise, this is being done via both a preferential issue as well as a QIP issue. Preferential issue of a little over 3,014 crore. And who is it that's coming as far as the pref issue is concerned? Number one promoter group entity is coming, which is called Rise Infinity Private Limited. The non-promoter entities coming in are very interesting. Matthew Syriac, again, noted investor, through his entity, which is called as Florentine Innovation LLP. Remember, they have stakes in other large companies as well. He's putting in some funds. Fortune Financial and Equity Services, that is the other entity that is participating in this fundraise. And along with that, a QIP fundraise of close to 3,000 crore. So very interesting development as far as Reliance Infra is concerned. No wonder then, on the back of debt coming down sharply and the back of the fundraise and the QIP fund infusion, we're seeing the stock doing quite well in the session today.
Okay, all right, Vivek, got it. Thanks very much. So much interest and buzz surrounding that stock, and investors really trying to, sniff out the possibility of any major business turnaround, perhaps, that could be in the works. Sudeep, let's, ask you about this as well. I'm sure you would have noticed the price move. I mean, it cannot go unnoticed because it's been so pronounced, right? What do you make of this? Do you think this signals, the start of a business turnaround itself? And what thoughts on the fundraising exercise that the company is now trying to do?
Well, a couple of things. One, I would say that this is a very good development as far as this particular company is concerned. They have kind of settled most of the debt, and there is a fresh fund infusion happening from some of the some well-known investors as well. Under these circumstances, I think we will have to be positive on the stock. Of course, it has moved up 40% plus over the last few trading sessions. The valuation, I'm not very sure at this stage. But the fact remains that if they are able to resurrect the business and all this money gets into the business, I'm sure, considering there is a major boom in the infrastructure spending and infrastructure activity across us, the tailwind definitely will be there, provided they are able to, garner the resources and use it productively.
Absolutely. There are so many. I mean, the market, of course, is also a more receptive place for a lot of these companies down and out, which are trying to engineer some sort of a turnaround. And I think this one is not alone in that sense. Just a quick word, if you will, on once again, Sudeep, what's happening with BSE. It's up. It's the biggest volume-led gainer. Another 7.5%. Stock hit 4,000. It's just absolutely stunning move. I think this. Let me just see what it's done this week, and maybe take a look at what it's done this month as well. So this week it's up 40%. Yeah, for the month as well, it's 40% higher, and of course for the year since January, it's up 80%. So two very large years. That is last year and this year. Sudeep, what would you do with this one?
Well, I really don't know what I will do. But if I'm an investor in BSE, I will stay put. I think the recent excitement on this stock was on the back of the fact that most probably NSE is getting closer to that, that long-awaited IPO. Now, if the NSE IPO happens, I'm sure there will be further excitement in the counter. Now, to what extent the valuation at this level is justified based on the fundamentals, it's very difficult to comment. But the fact remains that if NSE IPO comes, BSE definitely will get excited stock. And in fact, why BSE? Even MCX and some other listed exchange-related companies also will be getting a lot of attention. Fundamentally, I think this is an area of market infrastructure, and these are very important institutions. They have a kind of an annuity income, which is continuously growing on the back of increasing trade. I would like to also mention that the draft proposal circulated by SEBI on this entire FNO and curbing the retail speculation, I think at some level does benefit BSE vis-a-vis NSE. At least the negatives for NSE are more vis-a-vis BSE. So it may not benefit, but the negatives of NSE, in that, assuming that thing comes, is more compared to BSE. And that probably is also another reason for the stock to get a little more excited.
Okay, I'm just looking at the prices for Muthoot and Manappuram. That's the other big story of the day. Let's get Muthoot up. Both of those stocks, the other gold financiers, they've been a little downbeat now that IIFL Finance is basically back in the game. That's Muthoot. We'll just pull up Manappuram as well. And IIFL Finance, of course, has been surging almost 6-7% right from the start of today's trading action. Sudeep, what's the sense? IIFL Finance on massive wealth destruction. Now there's relief. Would you be in the stock and expect it to, go back to its glory days?
No, absolutely. I think IIFL Finance is definitely available at a very attractive valuation. Today morning it was very attractive. Now also it's reasonably attractive, I would say, and definitely it's worthwhile. IIFL, apart from gold, also have other lending book, and that's a very good blend they have. So there's absolutely no problem. They had this regulatory problem which led to wiping out of almost 50% of their gold loan book. But I'm sure, considering the kind of presence they have, they will kind of resurrect the book. And they have a deep presence. They have been very aggressive on the gold loan space as well. So a little bit of challenge for Muthoot and Manappuram. But fundamentally, we like all the gold finance companies. As a business, we like the gold finance. And considering that the gold prices have been on an upward trajectory, I think it's good time for all these three major gold financing units.
No, absolutely. Get that. Sudeep, thank you very much for joining us. Good speaking with you. Appreciate your time here. By the way, I looked at IIFL Finance and where it trades on a FY26 price to book basis. Of course, I mean, the gold finance book has shrunk, right? The AUM has shrunk massively over the last 6 months from when they did not get the business was banned by the RBI. So you got to take that into account. And of course, the rate at which the book gets built over the next couple of years. But basically, it's trading at about 1.5 times FY26 book. You have other NBFCs, diversified NBFCs. Don't look at sort of a gold-specific company or one sector NBFC, but a diversified NBFC. And most of them are at between 2 to 3 times price to book. Much larger ones, of course. You look at something like a Shriram Finance. Chola, of course, trades at 5 times plus. but some of the smaller ones as well. We'll take a quick commercial break here. We're going to be joined by Amit Jeswani of Stallion Asset on the other side for more conversation on markets. Stay with us. Okay, welcome back. We got the market, which is doing very, very well, 360 points now. And this is what I'm saying. You know, you're basically moving around 100, 120, 30 points. We have done that many times over, 100 up, 100 down, but with basically a base of at least 200, 240 points. Anything extra has kept coming and going over the last one and a half odd months or so. Over the last one and a half hours, beg your pardon. That's distance to 26,000, right? It just sort of leapt away, 200 points away from those levels now. We have Amit Jeswani now joining in to run us through what he's making of things. He's founder and CIO at Stallion Asset. Amit, welcome back. Always great to have you with us here on the program. Prashant here. Just what a day, right? I mean, rocking day with gains across the board. Large caps. Yesterday, mid caps and all were looking a little weakish, and actually a lot of pain there over the last couple of days in some pockets. But seems to be back again. I wanted, before we get to what you own, Amit, I just wanted your thoughts on this entire PSU space. I mean, take Cochin Shipyard as an example. The high was $3,000, fell to about 1,600. You know, it's back at about 1,800 rupees now. Look at so many other names, right? Garden Reach, and those are just shipbuilders, but many other names as well. What's your sense? Are we finally seeing a rotation? PSUs have been the leader of this bull market. Are we seeing some rotation away from there?
Hi, Prashant. Good afternoon. Thank you so much for having me on your show. Prashant, you're absolutely bullseye right. There's a sector rotation happening. The PSU trend started after March, after the war in Russia, in March to June 22. We are 2 years in the trend, and typically trends last for 18 months to 24 months. And you've seen that before with chemical, pharma, IT, they all topped in 2021, and it's taken them 2 years to come back. The sector has reversed. The trends have reversed. You have to find newer trends. Newer sectors will start making new highs. Of course, we never had positions in PSUs before, but we don't have positions now also, so we don't have anything to worry about. But overall, the markets are going in every 2 years. There are new sector rotations happening, so the market doesn't become a bubble. There are always over-owned sectors and under-owned sectors, and there's like some kind of neglect, and some earnings growth in these under-owned sectors gets you a lot of price action. And that is what the markets are doing, and you just have to do what the markets are telling you to do.
Amit, hi. Great to be speaking with you again. I remember our last conversation, right? And as always, you're very spirited about telling us that you're willing to pay for growth. I mean, as long as there's solid growth coming in and good visibility. The problem is that the sectors that are now, coming back in focus because of this rotation, they're still not showing great growth, whether it's staples, whether it's IT, whether it's banks. It's all fairly anemic, right? At least right now, given the evidence that we have. So are you interested in any of it?
We are interested. We keep thinking, when do we get in? We just need one confirmation of earnings growth, and that is where we get in. But for now, the numbers are a little weak. Financials last quarter was extremely weak, and we find it tough to get in. But the screen is telling us, and when the entire sector makes a new high together, and you have numbers, see, we chase earnings. At the end of the day, for us, we don't believe in narratives. We don't believe in where the money flow will go. For us, if earnings are there, that gives us margin of safety, that gives us ability to hold on, and when we get that, we will go in financials also. Actually, in our portfolio, we've got around 14-15% capital markets and 10%, 11% real estate. So we already have 25% of high beta in our portfolio. And Nifty 500 financial services is 31%. So we are not in financial services, but like we're not in the lending side of businesses. We are more on these sides. But when I look at numbers, what my companies are showing, but versus what financials will show, I still feel that we should do better. But we can change. We will have to add financials to our portfolio because we have literally near less than 1-2% financials like lenders in our portfolio. But very few ones have that growth and valuations what we want. Like the good ones like Chola, etc., are already expensive. And then now we'll have to go on the second tier ones, and not second tier, like super high quality ones only, but we'll have to find new names. We are already looking at it. In fact, today itself, me and my team members in the morning were saying that if you launch a financial fund today, we don't do all this, we don't do this marketing business. We have only one fund, but if you launch a financial fund today, you should make around 100% in 2 years if you're good enough.
Wow, that's a big statement, huh? And I think the market's going to pay attention because you've developed a knack of picking stocks that will show that kind of, delta or alpha, given the fact that you got into trends so early on, right? So just to explore that point a little further, till now on the financial side, I think you've been in some names like a Bajaj Finance, you've had Policy Bazaar, which obviously did so well. What is the evidence that you're looking for? What is that inflection point for lenders? Because you're saying that's where the next big money is going to be made. You're saying 100%, right? So what is that evidence that will convince you?
So 6-8 months, 9 months can be good for capital markets also. I think we should make 50% in capital markets first because they are 12 months in the trend, and that is where the earnings growth will be the highest. The financial lending trend, I'm not 100% sure yet. But you don't make bets when you're 100% sure. You start making bets when you're 70-80% sure. If today HDFC makes a breakout, so HDFC is at 2.7 times price to book. If that makes a breakout above and starts making new lifetime highs, that's around 1,800 rupees. And if it sustains there, I would say that financials for last 2 years, they've consistently been the worst performing sector. If I start seeing disbursement growth, last quarter disbursement growth was horrible. AUM growth was horrible. So that is why we don't have any interest yet in lenders, but we are looking at it. And I will tell you, when we buy something, we don't have any exposure right now. But if I think that sometime between now and the next quarter, if earnings are good, wherever earnings are good, this is where you become, the screen is telling you that something big might happen this quarter. We don't have confirmation. We need earnings confirmation and then we get it. But something to look out for.
But when you say if you launch something now, it should be up 100% by in a year, Amit.
No, 2 years, 2 years, not in 1 year. In a year, I would have lost it.
Stocks are up 40-50% in a month. I mean, it's just that kind of a market. But so you already have some names, some ideas in your mind, right?
So we
HDFC is maybe one of them.
Actually,
HDFC Bank, yeah.
The HDFC Bank we wouldn't buy.
Okay.
My number one holding would not be HDFC Bank. If we launched some, I would have.
Let's talk about this hypothetical fund. Hypothetical for now. What would it have?
I would have my number. I will tell you. Let me finish my buying.
Okay.
There is one health insurance company which is very good. It's the market leader, 33%, 32% market share. It's extremely reasonable. There are so many names.
Star Health.
I'm just giving an example. It's like across that entire space. I think we already have in Stallion's current portfolio. Like stocks are not recommendations. We are a PM trying to have vested interests. My family has vested interest. We keep trading very aggressively, buying, selling all the time. But if you look at BSE, I think today, last year profits, like adjusted, like normalized profits of BSE was 400 crores. If this once a week settlement happens, the profits can be secular to 2,500 crores in 2 years. So that can be a very big trade, I think. So you want to look at large changes of earnings. Now, this is based on if the regulation happens at 1 week NSE and 1 week BSE expiry options. If you see NSE option revenues are near 9,000 crores. That's what analysts say. 16,000 crores, 16,700 crores is total NSE revenues. these are changes. You have to bet on large changes which can change.
Amit, I just want to, sorry, if it is one contract per week per exchange, most are saying it actually perhaps it gives a bit of a boost to BSE. Yeah, that's correct.
A massive boost. Actually, if you see NSE index options does 9,000 crores of revenues. BSE does 100 crores a month. That is 1,200 crores of option revenues. So the total revenues of BSE is around 1,000 crores. This is 9,000 crores for NSE. If you think 10,000 crores is the total revenue. If you think BSE after one expiry a week will become 30% of the market, then your revenues, which is 1,200 crores, will move to 3,000 crores. If you think it will become 40% or 50%, whatever you want, it will become 4,000. Now there is no additional large cost which increases. So your profits, so revenues of BSE in FY24 was around 1,600 crores. My apologies, I'm not able to get to, but 1,600 crores can become a very large number. Your revenues can go up like this year itself, regardless of last quarter, they made profits of 267 crores. This quarter should be around 280, 290 crores. So broadly, they'll end the year at around 1,100 crores. And if you get, without change of anything, right now, market cap would be around 12.5 crore share. About 550,000 crores would be market cap of BSE. And right now, but if you see that if the change happens in 2026, in this, what happens typically in this is not like it's after 1 year market share change will happen. In 1 week itself or 1 month itself, that speculators will move to one exchange and boom, your market share change happens and your change of expectations, change of earnings happens. And when that happens, hopefully we make some money.
So what is, you'll have some number, right? What could profits be next for estimated profits?
I don't want to say it on national television, Prashant, but it's a very large number. I can tell you.
No, why not? I mean,
we have scenarios. We have scenarios that we are building in. And if those
their profits were 772 crores last year.
There's another income also of 500 crores as another income. Net of tax, I think profits normalized was 450 crores last for BSE. This year, in the first quarter, I'm just saying from memory, I can be wrong a few points, please. But I think by memory, the profits first quarter was 267 crores. This quarter, they should be around 270, 280 crores, 290 crores, in that range. But Q3, Q4 should be good, yeah. Typically, I think they will do around 1,100 to 1,200 crores profit this year. But this is not the year where that change of, I'm not expecting that change of regulation to happen. The change of regulation will happen FY26, where the complete impact happens. And when that happens, you don't know what kind of incremental revenue will come. But you know, there's a high probability of that happening. And we have taken
Amit, I take the enthusiasm on board, but just to complete a point, I mean, you have BSE, so that's fine. Isn't a lot of this already captured in the huge stock price surge? Is there any point getting in now?
Yeah, I got in at 3,400 only, actually. Okay. So I also bought after the breakout happened. Actually, the first move of BSE from 900 to 3,500, 3,200, we never participated. We had MCX in our portfolio, which we bought at around 2,000. We still have MCX. It is now at 5,800. So we made 3x, but someone else who bought BSE made 4x. So we were sad that we couldn't. But now I think it fits our framework where market share change will happen. NSE, which was a monopoly, it will become a duopoly structure. If we get it right, if we go wrong, we will lose money and come out. For us, it's not a big deal. We have 25 names and we keep going wrong, right all the time.
Yeah, but more right than wrong, I suppose, given the list that he has, which includes Zomato. We've not even discussed consumer this time.
I'm curious to know how much is Amit's portfolio up today, because the other stock which Amit owns is Novama, which is now almost 7,000 rupees. So that has been that's been a wealth creator for you as well, I'm sure. Amit, I see a few.
There's a block coming that will determine everything.
Yeah, I mean the Edel block, right?
Yeah, the Edelweiss, they have already disclosed in public that there's a block.
I think post the lock-in ends on 25th or 26th. So yeah, that'll.
Yeah, so if that block happens, that will give us a very good this thing, because Nuvama last quarter profits were 220 crores. This quarter should be very decent. Though we have vested interest in everything that I'm speaking. Do not buy these stocks. Just understand what we are trying to do.
Yeah. No, I get that. I see. So these names, I think I see Yatharth. You own, is that a new addition? I see Tips Industries. There is Red Tape. These are all, we will discuss these. Yeah.
Red Tape we bought before the demerger is already up 3x for us in last 1 year.
Okay.
Yatharth we got in this. It's a very small 1.5% kind of position. We got in this quarter. My team likes it. It should do around 160 crores PAT. We bought it around 44, 45, 4,300 crores market cap. So we bought it, and it's a very cheap company. This last quarter it grew at 37%. This quarter it should grow at around 30%. So it's got the highest growth in the hospital business, low valuations, and like at 27, 28 times we bought it. So we keep doing.
And Tips, Amit?
It's also growing at 30%, ROCs of 100%.
It's a recent addition, or?
Yeah, we bought this quarter only. This quarter.
Oh, this quarter.
So we were selling our PB FinTech, our PG, like we were not cutting, we're cutting weights in PB FinTech. We were cutting weights in PG Electronics, we bought PG Electroplast, we bought at, we more than doubled in a quarter. So we have to give it back and book profits and find something else. So we keep doing these kind of things, Prashant, where wherever there is higher rewards, that is where, and lower valuations, we keep moving there. But Tips we bought, yes, this quarter. Like we bought this quarter only, but that because Torani Saab said he will grow at 30%. Profits of this quarter is higher than that of Saregama. And so we bought, but Tips we like as a business. If you grow, and this is free cash flows. Tips is 100, like whatever profits you're seeing is free cash flow because content cost.
Yeah. I mean, just very quickly, apart from PB FinTech and Electroplast, have you taken profits anywhere else? Trend, Zomato, a lot of those other high flyers for you? Just to wrap up the conversation.
I would be cutting here and there. We keep cutting. We sold Domes at 2,800. Around that, we bought it at 1,700. We took some money out at 2,800. See, money is always limited. We always have ideas. So for us, in our cricket team, we also have to see that who's going to be our opening batsman, who's going to be our...
Maximize, yeah.
So we
Maximizing returns, right?
And if giving you opportunities to make 60, 70%, 80% in a quarter, 2 quarters, you make that money and move to the next opportunity, and you keep doing that till the time you have opportunities. You see, in a bull market, you have to change your net worth. And like you need to try. My portfolio beta is low. You buy good quality companies only, but we don't buy dirty companies or bad quality. We never had all those cyclical, etc. We buy high quality companies. But your goal is that at the end of the bull market, you need to change your net worth in a very big way, and minus 10% tak, niche tak ke baad, you will come to know that the bull market is over. Before that, you will never come to know. And you keep riding and keep trying to make most of this bull market. But if you don't change your net worth in this bull market, then it's very tough.
Yeah, no, absolutely. And hopefully we have this continuing for some time, right? We're not on borrowed time, hopefully. Thank you very much, Amit. It's a pleasure. Appreciate you joining in. Great conversation and great insights, as always, here on CNBC-TV18. Well, let's focus on the other sort of set of stocks which are doing very well. M&M and Escorts, right? Tractor names. Vinny is here to tell us what's happening. Vinny, over to you.
Good afternoon. So key triggers that are coming in for the tractor names, especially the tractor space is expected to do well. We're seeing good monsoons that will work out well for them in terms of the Rabi crop, as well as pick up in rural demand, and the sentiment there is surely a key positive that you watch out for in terms of tractor companies, and that's why Escort and M&M, that's going to be a positive for them. Other than that, across regions, festivities have started, so that optimism is something that will play out. Analysts believe that tractor inquiries have gone up sharply. That's the word coming in from analysts, as well as they expect industry, these two companies to outperform in terms of the other industry levels as well for FY25. Let's not forget the last time when we spoke to Anish Shah also on the channel, he highlighted himself as well that, you know, they've already started seeing green shoots. This was in the month of August. So green shoots were there. Good monsoon is a positive trigger, and they're expecting full recovery to play out for the tractor space in the second half of the year. And Navratri is something they believe will be doing well for the tractor segment of the company. So key positives there. And obviously we are seeing the FTSE readjustment and rejig coming in today. So yes, the adjustment is today, the settlement will be, and the with effect from 23rd of September. So inflows coming in for both Escorts as well as M&M in terms of the S&P BSE quarterly rejig, where we are seeing, and M&M is also going to be seeing good inflows there.
All right, got it, Vinny. Thank you very much for that. Well, let's move on and now look at another stock. Adani Energy Solutions is in focus. There's a bullish note coming through from Cantor Fitzgerald in the stock. Vivek is here to tell us more. Vivek, what are the details?
That's right. After Adani Enterprises, Cantor Fitzgerald now likes Adani Energy Solutions. They have an initiating coverage on the stock now. They have a buy rating and they have a target price that is well above the current market price at 2,251 rupees a share. What they say is that Adani Energy Solutions actually has a portfolio that includes transmission assets, distribution assets, as well as a smart metering business. They're saying the stock is an attractive way to play the rapidly expanding energy markets in India. They believe the company offers growth unlike any other publicly traded utility or energy company across US, Europe or Asia as well. Expecting the total revenue to grow at a CAGR of 20% from FY24 to FY27 and adjusted EBITDA to grow at a CAGR of 28.8%. They're saying that the peers are actually growing at low single digits and EBITDA at mid-single digits. So they expect Adani Energy Solutions to actually outpace the peers. Also, they note that valuations at this point of time are more expensive on a multiple basis, but they say that since the growth is meaningfully faster than peers, they're going ahead and assigning a valuation multiple of 26.5 times FY26 EV to EBITDA, and they continue to like the stock as far as a slightly longer-term portfolio pick is concerned.
Okay, all right, got it. Thank you very much for that, Vivek. Well, it is now time for D-Street chatter, and the dealing rooms must be quite a buzz because it's been quite some Friday. A little bit of volatility, but the net result is still a very green-looking screen. Dimesh, how is it going?
Well, Surbhi, it's a very strong day. We gave up some of the gains in intraday, but there is a very strong momentum, largely in the large cap names. And today we're going to see a very large buy figure as well, thanks to the FTSE rebalancing. That itself is close to $1 billion. And apart from that, even there is a basket buying, is what I understand, at some leading FIDs. So there is clearly momentum now, and looks like there is a shift now happening from the broader market stocks to the large cap names, right? So that's where the whole action seems to be. And every day you're having a newer leadership in the large caps today. So today looks like it's a day for autos to do well. So a lot of the auto names are buzzing in trade, and so is the metal names. I spoke about the big Macquarie note and the fact that commodity prices are firm. So that's a bit of a trigger for the metal names to do well. So, but clearly, Surbhi, the feedback is one, there is a very strong buying from larger FIs, and clearly it looks like there is a shift happening now from broader market stocks to the large cap names.
Got that. Now, Nimesh, in terms of specific stocks, what are you picking up?
Well, while I said there is a lot of momentum in the large cap names, but in my chatter there are most of the stocks are other mid cap names. So the first stock is Shaily Engineering. Big move on that stock, up 6%, but large volumes as well. A couple of large domestic mutual funds recently closed blocks as well, and now there is a big indication that maybe the company is likely to bag a very large order from a global telecom company. So that's the big buzz as far as Shaily is concerned. The second stock is Campus. Even that's been buzzing in the last few days. The volumes are on the higher side, and I understand some domestic mutual funds are active buyers, and hence a big move in that name as well. The third stock is BSE. I heard you guys extensively talking to the guest as well on why he likes BSE. The stock is up almost 40% in the last few days, and I understand one leading long-only fund has been an aggressive buyer in BSE, and that's the reason why a big outperformance there. So that's the third name. And the last one is Anant Raj. If you look at the stock, it's almost a 5x in the last 1 year, a big move within the real estate stocks. And again, for Anant Raj, apart from a real estate stock, it also has a trigger of the data center, and the buzz is that the company is likely to announce a few tie-ups in the data center businesses very soon. So that's the reason why Anant Raj has been buzzing off late.
All right. Nimesh, that BSE chat, of course, we discussed with Amit quite a bit, as you also said. I mean, that the capital market, I think there is a capital market index, right, which was recently introduced. BSE is part of it, has done very well.
Well, absolutely. That also could be one of the reasons why the capital market stocks have been doing well of late. So on 9th of this month, NSE had launched the capital index, and I was just looking at the data. It largely comprises of the broking companies, the exchange companies and all. In terms of weightage, the highest weightage in that index, it's a index of 20 stocks. The highest weightage has been assigned to HDFC AMC, and the second highest weight is for BSE. That's around 15% is the weight that has been assigned to BSE. And maybe that explains why all these stocks are buzzing in trade in the last few days. and so is the case in today's market as well. In fact, I understand Motilal Oswal has already applied for an approval with the regulators to launch a capital market index fund. So maybe now you'll see larger interest in terms of a lot of institutional investors tracking this particular index, and the fact that BSE has got a 15% weight explains a bit of move in not only BSE but all the capital market stocks in the last few days.
Okay, all right. Absolutely, capital market stocks have been on a roller coaster, and it's a roller coaster that's only been going one way, and that's up. Thank you, Nimesh, very much for all of that. With that, we have to actually quickly move on, take a quick break. We'll come back on the other side and get you the key final calls as the week is closing out, and then, of course, some more fundamental perspective on the market. Welcome back. It's been a good day. The market's retaining almost a 400-point gain. Back to Mitesh for some final ideas. Mitesh, what are the final trades?
So I think Havells is something which is closing at day's high. So BTST here with the stop at 2035 for targets 2080. And Marico, that's also closing at day's high. So 705 take, 704 half take as the stop loss and look for a 720 kind of target.
Havells and Marico. Got that, Mitesh. Thanks very much. You have a great weekend and see you with the market again on Monday morning. Now on to what clearly was the stock of the day, and that's IIFL Finance Relief finally coming in for the company on its gold loan business from the Reserve Bank of India after a full 6 months. Ritu is here with some perspective on this. Ritu, so what does this really mean now for the company with respect to its gold loan business?
Well, Surbhi, gold loans form a substantial part of IIFL business, IIFL Finance's business, which is why this is coming in as a big relief with RBI lifting restrictions on the gold loan business effective yesterday, and that means IIFL can resume sanctioning, dispersal, securitization, etc. of gold loans after what has been a 6-month ban. Remember, this ban was placed on 4th of March because of material supervisory concern. Subsequently, there was a special audit instituted by RBI that was concluded in June, and now finally the restrictions have been lifted, and the impact has been significant. For instance, the gold loan assets under management, they shrank by 53% in just 5 months from about 26,000 crores to 12,162 crores by August. The share of gold loans in the consolidated AUM, that also dropped from 32% before the RBI action to 21% now, and more than 1 million customer accounts are also closed during this period, and hence this removes a key overhang on the company and its stock with the RBI lifting the ban. Jefferies has, on the back of this, upgraded the stock to a buy with a target price of 595 rupees. They expect a gradual recovery in the gold loan disbursements, which is expected to normalize in the next 1 or 2 quarters, but they see the loan book declining further to about 9,000 crores by September. Now, while the total recovery may take some time, there'll be easing margin pressure, and high gold prices could offer some support to the company.
All right, got that, Ritu. Thanks very much for the perspective there. Indeed, and that kind of enthusiasm really being captured in the stock price today with that 7% move. Let's take a break on that note. We'll come back on the other side and we'll get chatting with Anand Tandon. Some final fundamental ideas coming up in just a minute.
Welcome back. Anand Tandon is with us with what he's making of things. Anand, apologies, coming to you a bit late today, but it's a blockbuster move today, 400 points on the Nifty. What do you make of it?
Well, we are reacting to the rest of the world, and to some extent, immediately after a cut, one did expect to see the market react positively. Happened overseas, happened in India. Anyway, the market trend has been strongly up. So there is no particular reason right now that one can see why on an overnight basis one should see a change in direction.
Okay. Hi, Anand, great to have you on. We've been discussing this with our other guests as well. Reliance Infrastructure, and of course, you would remember this company and everything that happened and how it went down all too well. But it seems now, after settling with their creditors, there's talk of fresh equity capital raising, and the market is getting so excited. The stock is up 50%. What would your advice be in a situation like this?
Well, I haven't examined it in detail because of the debt restructuring, etc. So it's been a little bit of outside the radar. But, right now, almost companies of that ilk are doing exceedingly well. This was one of those which was hanging fire. There are a couple of other companies also in infrastructure, especially power, which are suffering from PPAs which have been signed, which have not been rectified and consequently have debt which needs to be restructured. So I would imagine that, corporate action will be one of the larger drivers from here on.
Okay, fair enough. Actually, quite a few stocks today doing very well. I mean, the capex theme, which a lot of people said that, there's a move away from it happening. In fact, the PSU index is doing really well. There's IRB Infra came up on the screen right now, surging 10%. So if someone wants to play power or infrastructure, what would your top picks be at this moment?
So I don't think it makes sense to be looking at top picks at this stage. The thing to do is to be in the market in whatever sector you think will make the money. So if power infrastructure it is, get an ETF, buy it, or a fund and just buy it. Because, trying to be selective right now requires you to be able to justify what is going on. And I have lost the ability to do that.
You can't throw your hands up, Anand. You're here. You gotta play.
So as I said, I'm not suggesting that we should be out of the market. I'm just saying that buy the damn thing. Don't try and be choosy or picky about this one or that one, because when everything is trading at 50 to 150p, why bother?
Yeah, no, got that. Yeah, I mean, it's always right. I mean, you don't know what is helping what. I mean, is the easier kind of environment helping some of these turnaround stories, or the turnaround stories are being rewarded? Both things, I guess, in many of these cases, especially names like Reliance Infra, etc. We'll see what finally happens. Some investors are coming in, so we'll talk about that. The other one is these tractor companies, Mahindra and Escorts. This is just a rural kind of a bump. Another, you think something else is afoot?
I don't think so.
6 and 4% gains each. Yeah.
Yeah, I mean, it is a rural bump cycle. There is a cycle in terms of tractor demand. I don't think it's particularly favorable necessarily at this stage, given where we are already. But that said, we are looking for anything which is positive. So given that, the monsoon has been good, the likelihood of sowing is quite decent in most parts of the country, credit towards farm, etc. will go up. You could stack up a list of reasons. You could also stack up a list of other sets of reasons that, most people who have taken up loans, for example, have multiple loans on their books. I remember reading somewhere that, 10% of all people who have borrowed have got more than 10 unsecured loans. So it depends on which side you want to look at. Right now, we are looking for positive. So I think this is a sector which is, I mean, I don't think there's anything specific today which one can attribute to this.
Okay. All right, Anand, we'll leave it on that note for today. Thank you very much for joining in. The bell has gone. The day and the week has come to an end. And it's been an end with a flourish. 400 points up on the Nifty. And the Nifty actually reclaiming the highest point of the day, probably closing at the day's high, despite a little bit of volatility here and there. 400 points up. So if we talk about the big moves and shakers, M&M, look at the move on the stock, 5.5% on the upside. Of course, the Bank Nifty has soared with a gain of 1.7%, and that reflects in stocks like ICICI Bank, nearly 4.5% up on ICICI Bank. Kotak and HDFC Bank have also done fairly well, up between 1 to 3%, depending on which bank stock you're looking at today. L&T, Lever, these are some of the other big winners today. Nestle. So as you can see, it's really cutting across sectoral lines. It's a very broad move. The one stock that stands out is actually State Bank of India. It did not participate in what was otherwise a very bullish day for the large cap screen and also for banks. So that one stood out. The mid caps as well, Prashant, not bad at all. I mean, the gain is almost 1.5%, more than 1.5% actually on the mid cap index as well.
No, absolutely. And although for the week, I mean, if you look at the change, the Nifty is up 1.8. I mean, Monday to Thursday, nothing, flat. Most of the gains came in today. Same thing with the sensex. And mid and small caps, Friday to Friday end, kind of flattish. And they picked up towards the end. Otherwise, there was a bit of profit booking. So that's why for the week, as a whole, they are absolutely flat. But it's turning out to be, just a great September so far. There are so many 20+% movers if you just take a look at the NSE 200, the NSE 500 group of companies. So a really vibrant screen over the course of this month once again. So good markets overall, absolutely no doubt about it. Sensex 1.6, Nifty 1.5, Bank Nifty 1.6. Bank Nifty, of course, this week finally made a new all-time high, and that's a good thing. 53,930, are large private banks starting to come alive? I think that's a big question, because there have been many false starts. People have been sort of calling this, well, it's the times now. So far, it hasn't materialized, but are we finally there? I think that the question is being debated quite a bit. It's a wrap on this edition of Closing Bell. Thank you very much for staying with us, but don't go anywhere, because Editors Roundtable is going to take the action forward. Just stay with us.